Every market crash in history has one thing in common. The people who got rich bought exactly what everyone else was throwing away. And right now, in 2026, it's happening again. I'm Marco Valenti, and what I'm about to show you is going to make you uncomfortable. Because by the end of this video, you're going to recognize 4 assets, 4 specific things, that ordinary people have panic sold in every single crash since 1929. And every single time, someone on the other side of that trade walked away a millionaire. The pattern is so consistent, it's almost mathematical. And the people quietly buying right now, they're not on TV, they're not on the news, but they're moving, and the data says so. Stay with me, because number 3 is the one that's repeating right now, and almost nobody is talking about it. Asset number 1, stocks, blue chip stocks. October 1929, the Dow loses almost 25% in 2 days. By 1932, it's down 89%. 89. Regular families dumped shares of companies like Coca-Cola, General Electric, Procter & Gamble for pennies. Pennies. They were terrified. And honestly, you can't blame them. Everyone they knew was broke. But a small group of buyers, people like Floyd Odlum, who started with $200 and ended the depression with over 100 million, bought those exact same shares while everyone else was running for the door. By 1954, those panic-sold stocks had hit all-time highs again. The buyers, generational wealth. The sellers, locked it in forever. Asset number 2, real estate. In 2008, the housing market collapses. Foreclosures everywhere. 12 million Americans lose their homes. People panic sold houses for 50, 60, 70% below what they paid. Whole neighborhoods went for the price of a used car. And the buyers, private equity firms, quiet investors, a handful of regular guys with cash and the guts to write a check when their neighbors thought the world was ending. Blackstone alone bought over 50,000 single-family homes between 2012 and 2014 for cents on the dollar. Today, those properties are worth 3 to 5 times what they paid. The people who panic sold in 2008 are the ones renting from those buyers right now in 2026. Asset number 3, gold and silver. And this is the one that should make you sit up. Gold and silver. In every modern crash, 1980, 2008, 2020, there's a moment of margin call panic where investors get forced to sell their precious metals just to cover losses elsewhere. Prices flash crash, people dump it. Then, 6 to 12 months later, it rips to new all-time highs. Right now, in 2026, with 78% of Americans expecting things to get worse, with tariff inflation biting, with the AI bubble talk getting louder every week, gold is doing exactly what it always does before a major repricing. The smart money is accumulating, quietly. The retail crowd? They're panic watching their 401k and ignoring it. History does not stutter on this one. It's the most reliable trade in 150 years of financial data, and almost nobody owns enough of it. Asset number 4, cash flowing businesses. And this one's different. Cash flowing small businesses. Every single recession, 1929, 1973, 2008, 2020, desperate owners panic sold their businesses for 10-20 cents on the dollar. Restaurants, laundromats, repair shops, manufacturing companies that had been profitable for decades. And the buyers, guys you've never heard of, turned those panic sales into family fortunes that still exist today. This is how the 0.1% really works. Not stock tips, not crypto. They buy productive assets when the seller is desperate, period. So here's what I want you to take from this. Crashes don't destroy wealth, they transfer it. From the people who panic to the people who prepare. If this video opened your eyes, smash that like button, hit subscribe, and turn on the notification bell. Because the next one I'm dropping breaks down exactly what the smart money is buying right now in 2026, and you do not want to miss it. Drop a comment below. Which of these 4 would you buy first? This video is for educational and informational purposes only. It is not financial advice. Always do your own research and consult a licensed professional before making any investment decisions. And always, stay focused, stay consistent, stay elite.